I made a big mistake and I missed out on huge profits. I could have made a lot of money, but I made a mistake. And the sad part is that I made a mistake on something that I preached to you guys not to do. So I went against my own rules and it turned around and bit me in the butt. So I missed out on a lot of profits. Hey guys, how's it going? It's Charlie Marr. And well, like I said, today I'm going to teach you, we're going to go over a mistake that I made, and we're also going to break down the liquidation value on a foreign stock. Yes, this will be a foreign stock. Anyways, but that's why it's great to have different brokers, because sometimes one broker doesn't support certain exchange, or you can't invest in a certain company or in a certain country. A really good broker is Interactive Brokers. I'm a huge fan of it. So this is a foreign stock, but let's go over the numbers. And I mean, I'm sure you'll learn something either way. And I'll show you everything. So the stock we're going to talk about is called Hosiden. Hosiden. Sorry if I'm butchering it. I don't know. And the numbers we're gonna go over. Everything's gonna be under yen, so the Japanese currency. But it's okay. You know, it doesn't change anything. All the ratios, numbers, the math, everything's the same. It's just different currency, but you'll still be able to see it. Anyways, what was I gonna say? The mistake. So this is the stock that I was looking at. Okay, it's called Hosiden, and this stock was trading around 850, and this is again in yen. But anyways, the ratios will all be the same. It was around 850, and then I believe on the Discord, because I have a Discord, I have a Value Investors Club. I shared it, and I think at that time when I shared it, it had already gone up a little bit from 850 to like 880, something like that. It had ran up a little bit. But let me go ahead and show you guys that. So again, I have a Discord, and in my Discord, it's an investors club. So it's not, anyways, it's just a club. But I do post stocks that I'm interested in. I have a watch list, and I posted it here, apart from when I buy stocks. So here it is, you know, by Charlie Marr, Hosiden. The ticker is 6804. It's in the Tokyo Stock Exchange, and the website, a little bit of what it is, and here where's the values. But here's the mistake that I made. So I caved in and I was looking at technical analysis. I know I should quit investing. So I was looking at technical analysis, and I saw this pennant, and the stock was around 850. I don't remember the exact price, but when I saw it, I was like, you know what? It has this strong pennant and it has a strong support level. So what I'm going to do is I'm going to wait for it to hit the support level or go underneath it and then buy it, because but the value was already there. I just wanted to. I got caught up looking at technical analysis, and I'm really pissed off. This is why I don't like to do technical analysis, because a stock could do whatever it wants whenever it wants. You know, you can only do so much. So again, I missed out on the stock for wanting to wait because I wanted it to hit support. Sure enough, there is something in my head. Sure enough, it never hit support, and it just started to run up and run up and run up and run up, and I was just missed out on gains. So that's the mistake. All right, let's go ahead and go over the company. So I'm going to use ticker. I've actually never used this website, TIKR, the ticker.com. This is the first time I've actually ever used it and going to use it. I should be able to find everything because it's just, I don't know, just names. But let's go ahead and get into it. Okay. So let's go ahead and search for the stock. It's ticker, the code is 6804. I think I already have it open. Yeah. So 6804, you won't be able to find this on something like Seeking Alpha, because it's a foreign stock that's trading under the TSE exchange, so you won't be able to find it. But it has it here on TIKR, so it's great. What else was I going to say? I was going to mention something else real quick before I get into it. Oh, so they have an American version. So they have an OTC American version, which is just in US dollar, but I don't recommend doing that one because its home base is in Japan, you know? So all the volume and the stock that has the most volatility and the most movement in volume is the actual stock that's under the Japanese exchange. I think it's TSE. So when I shared this, so if you're looking at a foreign stock, yes, you might find it as an OTC stock, but make sure that the volume isn't held, or like the stock isn't best held in the actual currency or the stock exchange where it's actually from. So with this was a good example of a stock that's a foreign stock that I didn't recommend the OTC version. I told everyone, do not buy the OTC version, buy the actual like yen one, the actual one from Japan, which is 6804. I think the other one is called HOSI, something like that. Anyways, let's go ahead and get into the numbers. So financials. That's where we're going to go. We need to go to the financials. So let's go ahead and go right into it. And as usual, annual financials in millions of Japanese yen. So all this is going to be in yen, which is fine. We're looking at yen. All this is in yen as well. It's 6804. And as usual, you're going to see three different reports or statements. You have your income statement, your balance sheet, and the cash flow statement. And we're going to spend time on the balance sheet. So let's go ahead and get right into the numbers. Before that, so this is the company's name. This is where it was trading at 850. That's the stock's price. And then the market cap at that time was around 48 billion yen. So that's what we're going to focus on. Okay, we're going to try and beat these numbers and see if the stock is a buy. That was acting like it was broken. So we're going to try and beat those numbers. Let's go ahead and start getting into the numbers here. So we're going to look at this column here, which is the same numbers. No big difference there. I'm going to move this up to the side here. Let's go ahead and get into it. Cash and cash equivalents, we're at 42 billion. That's yen, and that's perfectly fine. Again, we're going to do nothing with total cash and short-term investments. There's nothing to do. I think it's perfectly fine. I do like how the company has overall been growing. Well, it's kind of been up and down in cash. Anyways, that's not equity, so it doesn't really matter. So we can't do anything with cash. We're not going to change that. Total receivables. We have account receivables here, nothing in other receivables, so we can just see the total. That's 32.338 billion in account receivables. So let's go ahead and put that number down. That's 32338. So that's 32338, and this is billions. Oops. Yeah, that's billions. I'm going to use the whole number. You can technically just use the decimal side, but just for the case of the video, we'll do the whole thing. And let me just make sure it's correct, 32338. Okay, so what I feel comfortable doing with this one is just a 25%. It's just a very go-to number. So we're just going to grab 25 of that. So we're going to do times 0.25. And whatever number we come up with is what we're going to actually end up using to subtract on the company's liquidation value to get to the company's liquidation value. So let's go ahead and do the math. Wow, I'm clicking all this stuff here. That's 32.338 billion times 0.25. We're looking at 8084. Okay, so let's go ahead and put that down. I'm going to remove all this because I don't actually need to put it on here, and I'm going to put that off to the side. What was the number? 8084, 8804. Oh, I did that wrong. 8. Zero, and I think is it 84. Sorry, this number's so long, I'm getting confused here. 84. There you go. That should be correct. 8084 500. Okay, so that's that. We're grabbing 25% off the receivables. Inventory. They have inventory. They have nothing else. It's just inventory. Again, this is more of a basic company, so that's pretty good. And inventory stands at 41,127. So let's actually just put that in. 41,127. I'm just going to do the decimal part this time. It's easier. Where are we? Where were we? Where were we? Where's the total inventory? Inventory. Here we go. 41,127. And I'm going to subtract 50%. I've already looked into the company. I think, again, that's a really great number to do. So we're going to take... we're going to grab half of that. That leaves us at 20,565. I'm going to write that down. 20, I think it was 563. 5635. Yes. And I believe this is also billion. Yeah, 20 billion. Yeah, so that's, again, we're subtracting half of all inventories. And again, like I said, I'm not going to go into it too crazy. I mean, for the account receivables, for example, I mean, you want to make sure who is the one that's paying that company those receivables, and is that company going bankrupt? Could they continue paying that? Like, are they in a contract, and is that gonna stop? Like, you need to figure all that stuff out. I've already done it all for this, so I'm not gonna get into it that crazy. Same thing with inventory. You want to find out more or less what that inventory is and what discount rate kind of makes sense. But for this, I already understand it. I know what it is, and 50% is great. So there's nothing more to do that. Okay, let's see what else. Do they have goodwill? Do they have everything else? So let's go ahead and go down the line. Total current assets, that stands at 143. That doesn't matter to us. They do have a lot in net property and plant and equipment. That's fine. Other intangibles, that's 404 million. We need to be careful there. And we're going to remove all the intangibles. Let's just get rid of all the intangibles. I'm not going to even bother doing the research or understanding what the intangibles are. I'm just not going to include them on this one. That's a huge thing to remove, right? So that is 404, right? 404, that's 404 million. So let's put that down. 404, and that's million. What else do we got? Let's go down the line. Oh, that's it. Again, this is a very easy one. There's nothing more to it. Usually, I mean, this is it. There's nothing more to it. I love it when they're this simple. Let's go ahead and, yeah, that's it. Other than that, all these are liabilities. So let's go ahead and sum up what we have here. These are all the numbers that we're going to subtract from the assets before we remove it off from the equity. So let's go ahead and do that. So we're going to subtract all these numbers. Let's pull out the calculator. We're looking at 8084, and that's billion. There you go. Plus, we're going to add them all, and then we'll grab the total number, and at the end we'll subtract it, just in case that doesn't make sense to you guys. Man, this is confusing because I'm doing it by billions. I should have done the decimals. We're going to add that 25,630,500,000, and then we're going to add the 404 million that we're removing. 404 million. So in total, we're going to remove around $29 billion in yen. Let's just remove 30 billion. Let's round it up. Let's just get a nice even round number. So we're going to do 30 billion. That's how much we're going to remove. And that shouldn't even putting the dollar sign. It's in yen. Anyways, we're going to be removing $30 billion in yen from this company. Let's go ahead and do the rest of it. Again, these are all their liabilities. There's nothing to change or do here. We're not going to, we can't discount that. I mean, you can add more, but you can round stuff up, but that's a whole different thing. We're not going to worry about that. Total common equity. Total equity, again, they're the same. That's very common. I would make sure, because sometimes they're different, and I would stick to total common equity if they're different. And we're at 114,957. So 114,957, and this is, I'm going to put the dollar sign, but just remember it's yen. Let me make sure that was correct. 114,957 billion in total common equity. So what we're going to do is we're going to now subtract these $30 billion from this, which would be around here. Sorry for the squeaking. Yeah, so that's what we're going to be subtracting. Let's go ahead and now do that math. So we have 114 billion 957 million. Yeah. Is it 114? Double check. I got confused there. Yeah, 114. Let's open this up, and we're going to subtract 30 billion from it. So that's that. That's million. That's billion. That leaves us with 957 billion. So when we do the math, that leaves us with 84 billion. I'm going to put the whole number just, it'd be easier. 957. That's more or less the liquidation value that we can get out of this company. And just because it's at, we can round it up to 85 billion. I think that's fair. On top of that, like, you don't have to be precise. I usually recommend to go down, not to average down, not average up. But let's go ahead and do it in this case. Just it's going to be easier for our numbers, right? So more or less, we can say that the liquidation value for this company is around 85 billion. So that is the liquidation value. The liquidation value of this company is around 85. Wow, I cannot write a number 8 perfectly. 85 billion, and this is in yen. Now, let's go ahead and grab the stock's price. Also, look at this difference. So this is the market cap it had. It was at 48 billion, and we got a liquidation value of 85 billion. That's undervalued. You don't have to go any further. You can just do the math based on this, but sometimes it's easier to look at the actual stock price, but in yen in this case. So let's go ahead and do it now for this company. We just need to we need to know how many total common shares outstanding there is. If we scroll down, we should be able to see that here, total shares outstanding on filing date. That's a fine number. We have 5646, 56,046,046. So we're going to go ahead and do that. That is 85 billion, which is the number we're giving it, divided by 5646. 5646, let me make sure. 5646 million. That would give it a market cap of around a stock per share of 1.505. So let's go ahead and put that in. That means that the liquidation value per share, I don't know, I never know what to put there, would be roughly 1,505. And this was going for $850 per share. That is undervalued. Now remember what we did. This is why I feel very confident over this. We grabbed all their assets, we subtracted numbers out of their assets that should be reasonably subtracted, and then with whatever was left over in their assets after giving it a discount, we paid off all the debt and all the liabilities and everything. And then we came up with a number, and that's the liquidation value, more or less, that we should get. And then on top of that, remember, we're going to give it a margin of safety. So what is a margin of safety? You can, let's do 50%. Let's just see what number that gives us here. So all we have to do is obviously divide this by 2. And let's just see where this would be a buy. Again, we're trying to buy $1 for 50 cents. So divided by 2, if it's under 752. So it wasn't all the way down there, 752. So if this stock is trading at or below 752, it's a buy. And if we go back to the chart, you can actually see that this stock, I guess in March, actually started trading below liquidation value. So actually, we grabbed this and we put it, let's put this green line under the buy, which was 752. 752. So the moment this stock went below this price, it was like a major buy. Funny enough, look at this great example. Look at this great example. Let's go back to 2019. Let's assume the numbers are very similar, because I'm pretty sure they're going to be very similar. The moment it started trading below that price, below that 750, even though we're doing a year after, it ran all the way almost to its fair value, and then it went back down again. And then it did it again. It went all the way down to, what did it hit? To 620, and then it ran up to almost 1,400 again. So that's pretty cool to see. And what was I going to say? And then its liquidation value. Let's add that on there. That's what I was going to add. Its liquidation value stands at 1,505. Right about there. The stock has been trading so like just right there. A great little bounce in that whole area. And I'm sure, again, this is a great stock you could have held, and I'm sure we'll cross that. We'll see where it ends up in the future, but I'm very confident the stock from where it's at now will cross that, where you could have sold. I usually sometimes sell a lot sooner, and I'll explain why afterwards. So that is the number. Let's just look at the percentage gain. I mean, It was at 850 when I found it. And if it went to 1505, that was a 77% return on my investment. If I went in and it once it rises to its liquidation value. That's not bad. That is pretty good. And this stock, what else? That's pretty good. That's not bad. And I would feel confident in a stock like that. Let's go and check a couple things now to make sure. Let's see if this would have passed. So we have all the numbers, right? We know, let me see what 1805, 1505. That's all I need to know. 1505 is the liquidation value. And you know what? Let's just say it's 1,500. I add the extra 5. Let's round it down. 1,500 liquidation value. And this is a buy if it's under that, which is what, 750? Let me just double check my calculator. I'm pretty sure it is 750. But just double check. I don't want to make a mistake. Yeah. 750, but it was at 850, and I felt comfortable buying it. And let me show you why I felt comfortable buying it at 850. There's a little key thing here. What have I told you guys? When I draw this, what have I told you guys? When a stock is going up, time is your friend. But when a stock is going down, its fair value, its liquidation value, time is your enemy. All right? Let's see what this company has been doing overall in the equity. In its equity overall, let's just see if it's been rising or if it's a dying. So that's what we're going to determine now. We're going to determine if it's a dying company or if it's a growing company. So let's go ahead and check that out. And we can see that in the equity. So we go here to total equity. Let's see what it's been doing. From 76 billion, it rose to 76.6. From 76.1, it went to 76.6, to 86.9, to 94.1, to 100 billion, to 109 billion, to 114 billion. Tell me right now that's not growing consistently. That is growing consistently. It's growing very well. We can assume that it'll probably definitely cross 120, 130 billion in the future. What does that mean? It means that this 1,500 is going to rise. It might end up at 1,550, 1,600, 1,700. Because it's rising, I felt comfortable not having to buy $1 for 50 cents. In this case, it was like buying $1 for 60 cents or something like that. So usually I buy $1 for 50 cents. But in this case, because it was a growing company, and it's very clear that their equity is growing and that this liquidation value is going to continue to grow, eventually where I bought it at, if I would have bought it at 850, it would have became the buy price. And we're going to see that. We're going to see it keep growing. It's going to keep growing. So for me, I was okay buying $1 for 60 cents or whatever the actual ratio is. You guys can do the math. So I was okay buying a little bit higher, but that's still a large margin of safety. I mean, it's worth 1,500. I was buying at 850. That's when I was looking at it. Heck, even if we bought it at 900, you still have a nice margin of safety. That's like buying $1 for 65 cents, $1 for 70 cents on a growing company where time is your friend. That means the longer you hold this, the higher that number is. And the great part about this is that if you're looking at a stock, what was I going to say? Yeah, if you're looking at a stock chart, right, and this is a stock price, that its liquidation value is constantly growing. Let's just say that, I don't want to change this anyway. Anyways, let's just say that the stock's usually trading around this area here, right? But overall, its liquidation value is rising. Well, eventually the stock will end up trading around here. And let's just say it keeps rising. Well, eventually it'll be trading around here. So no matter where you bought, I mean, you have a nice run up going. And obviously there could be a time where the stock actually goes above the liquidation value, which is beautiful. That's the best part. That's the best case scenario. So is it a growing company? Yes. That's why I felt comfortable not necessarily buying $1 for 50 cents. What was the other thing? Is it undervalued? Yes, it was undervalued. Does it have a margin of safety? Yes, it has a margin of safety. Let's see what else. Are they diluting shareholders? That's a very important one. Let's see if they're screwing over shareholders. Total shares outstanding, 61. So in 2016, they had 61 billion, 49 billion, 49, 59 billion, 58, 58, 56, 56. This is the best thing we can see. They're buying shares back. Every other 2 years, every other year, they're buying shares back, which means your equity in the company is actually increasing. You own a higher percentage than you did because they're buying back shares, which actually means the stock's price, the stocks is actually going to be worth higher. It's going to keep going. It's going to be worth more and more over time. So forget that it's just a growing company in general with its liquidation value. Within that, they're buying back shares, which means that is going to be worth even more. So that's even a better idea. That's the best thing we can see right there. They're buying back shares, and they've been doing that since 2016 consistently. So we can assume that in the next year or two, if we buy shares now, they're going to be worth more. We're going to own a higher percentage. Our equity is going to increase in the company. So check. Let's just check a couple things. Are they making money? Are they profitable? Or are they losing a lot of money? Let's go ahead and check that out real quick. Let's go into their income statement. So their equity is growing. They're buying back shares. It's undervalued. They're not diluting shareholders, which I guess is the same thing as buying back shares. Same thing. Let's look at their total net income. I have no idea where it is here. Revenues, gains and losses. I'm not even seeing it here. Income statement. Maybe it's in their cash flow. Net income. Well, I guess, yeah. Net income. Their net income is growing. Another fascinating thing. They used to be negative 2016. They went from 2 billion to 10 billion to 13. They went down a little bit, 13, 16. They'll probably end up at 17 billion, 18 billion. Net income is rising. That's great. That's another check. That's another pass in my books. Again, it was a great buy. I just made a silly mistake because I saw this stupid pennant and I thought I can catch it hitting support, and it didn't do that. It ended up going right up, which we can actually see that in the trading view here. So if we move out, I don't remember how it looked, but I used to have it on here. I deleted it. It looked something like this. I'm not gonna be able to replicate it exactly, but it was something like this. Actually, it broke out of that pennant. And then we had like a really long one like this. It was something like this, very similar. And it was trading around 850. I don't know where 850 is. It was around this area here. And, well, I guess in here because this is 2020. And I thought I can catch it down here. I was just waiting for it to hit support and sure enough, I mean, from that area, I mean, all it did was just rise. And the sad part is that it ran a lot. I mean, from this bottom area, it ended up running. It ran up 60%. That sucks. And it was very close. It was very close to hitting that that liquidation value. And the best part is that, like I said, you already saw everything. It's going to hit it. They're buying back shares. That's going to increase the value per share. It's a growing company. Their equity is growing. Everything's great. It's a pass overall. It was a great company to be invested in. Well, now it's hard to invest in because now it's trading at 1,200. It doesn't really make a lot of sense to me now to buy it at 1,200 to sell it at 1,500. Even if it's growing, I mean, I'm also not trying to buy $1 for $1 and then sell it for 110, 120. You know, it doesn't make sense. But anyways, I hope you guys learned something on this one. That was a liquidation value for Hosiden. It's a Japanese stock. It's a stock that you can buy on Interactive Brokers. You can exchange your currency for the yen and buy through that. They do have an American version, like I said, but the volume's not that great. Actually, you can see that here. You see how the candlesticks look here? You see how the candlesticks are very nice and just moving overall? And then look, if we look at the American version, it's going to look kind of shitty. So we go to Hosiden. Hosiden Corporation, here it is, the OTC stock. Look at how crappy this looks. What is this? There's no volume, you can't do anything. Was that even the correct one? I think it was. Hosiden Corporation, yeah, it's that one. It's the OTC stock. Anyways, this is why we don't mess with this version. Let's go to the inside an hour. Wow, those are very small dojis. That's funny. You can see it doing overall the same. But anyways, this is why we would not touch the OTC version, and we would actually go with the 6804 version, which is there it is. much better. Sad, really sad that I missed out on this one. Oh well, anyways, hope you enjoyed this video. It's about 30 minutes. I'm going to cut it off there. I will see you guys on the next video, but those were the numbers for Hosiden.